We're citing supply chain issues as one of the things that may be a hairball in the quarter ahead. Tell us about it. Where are the snags, if there are snags, and how serious are they going to be, and how deeply might they affect your holiday season?
Well, there have been supply chain issues for the last year due to increases in demand and then just lack of either people working or lack of capacity shipping goods into the U.S. You're seeing factories having products completed, not being able to book containers coming over on ships, but the ships not being able to get into harbors. And once they get into harbors, a lack of truckers driving goods from the harbors to wherever they need to go. It's been an interesting year for everyone. Demand continues to increase, particularly for online retailers. And business has been good, as you can see from the record second quarter revenue numbers that we posted, and also profitability numbers. However, it's very gray going into the back part of the season. You have countries which are important in manufacturing, like Vietnam right now. You have the south of Vietnam completely closed from the middle of July until at least the middle of September. So it's giving people a lot of agita and a lot of discomfort really being able to predict accurately the holiday season.
So let me follow up with two quick questions, if I might. Are most of the supply chain issues traceable back to COVID or not?
In most ways, yes. It's either lack of workers, lack of people being able to work, whether it be at ports, whether it be truck drivers. And you're also seeing just pent-up demand of people trying to get their hands on goods without enough containers being able to ship from Asia to here.
So let's talk about, I'm very interested, I'm fascinated with this, this container issue. How much is it cost, excuse me, how much more incrementally is it costing you to get a container, if you can get one, to ship your stuff?
It depends, but it can be up to as much as 4 times what it was a year ago.
And what do you do with that 4 times higher expense? Pass it on? Eat it? What?
In some cases, you pass it on. In some cases, you can make it up in pricing that you've already put into place. But in a lot of cases, what's going to happen throughout the industry is it's going to be passed on to the consumer.
I'm curious about profit margins, Jerome. It was something we mentioned last hour talking about American Eagle and some of the other companies. You say you actually drove higher merchandise profit margins through the use of data analytics and improved inventory management. And I should note, by the way, you're helped by the recovery in school uniform orders, travel-related national accounts, swimwear you have in a bunch of Kohl's locations. But tell us how you're able to increase profit margins at a time like this.
It's through supply and demand really online. We're using artificial intelligence to be able to change pricing depending on demand for certain products. If you have something that's not selling extremely well, you can lower the price in real time and increase the demand for that product as the consumer is looking at it, or vice versa. If you have something that's selling extremely well, you can raise that price and increase your margins.
What % of your sales are online?
95.
95%. So this gives you an ability in real time to do something that you couldn't have done simply 20 years ago, 10 years ago.
No, this was impossible to do at that point in time. As I joined the company almost 5 years ago, we were bringing on a group of data scientists who have done a phenomenally good job at helping us manage our margins. And we think that there's even more opportunity for us in the coming months and years.